Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is November the 28th. It is 10:30 a.m. in the UAE, and Brent crude oil is trading a little changed, nothing too dramatic, with Brent 72.88, under $73, basically unchanged today, a few pennies up and down. Let's kick off this morning with Laurie Hitayan, MENA Director, Natural Resource Governance Institute. I hope has bought a flight home and will be in Beirut for the weekend. Laurie, your thoughts on the decision, this ceasefire, this whatever peace treaty, I don't know what you'd call it. Ultimately, at least the bombs have stopped dropping in Beirut. Your take on this deal, what does it mean for the region? What does it mean for energy markets?
Good morning, Sean, and everyone. Yes, at least the bombs have stopped in Beirut and other cities as well. And the ceasefire, at least, is still holding for 2 days for now. Let's hope that it will stand for 60 days. And after that, it will be a permanent a ceasefire. So definitely, like the tensions that were increasing between Lebanon and Israel, and therefore like the intervention of Iran was from the beginning, that was like what the market was interested in. They were interested how much Iran will be involved, and if Iran is involved, what will be the reaction from the Biden administration. And all of that was like putting pressure on the market, and definitely like Israelis' retaliation when there were talks about like maybe they will be attacking some oil facilities. All of that was putting pressure in a way that like everybody was looking, but no real pressure on the prices. But like everyone was on edge about what is going to happen. The Biden administration or the election were lost by the Biden administration and Harris, and now having Trump, which is like, okay, what will Trump do with Iran? And is it going to be maximum pressure? And that does mean, like, are they going to put more sanctions on the oil and gas price, on the oil and gas sector, or are they going to do something else? Are they going to allow Israel to attack some nuclear facilities? Because in the announcement of the ceasefire, Netanyahu said one of the reasons is like, so that we can focus on who matters more, which is Iran. And with Trump coming in, what does that mean? So I think like the pressure is not completely off. Yes, the war has ended, so less pressure, but like looking forward with this combination of Netanyahu and Trump vis-a-vis Iran, that means that still Iran is under threat of any kind of action towards the oil and gas sector, and therefore the market could be affected. So that's what we are reading now into the ceasefire and the implication on the market.
Let's go to Mark Oswald, a chief economist and global strategist at ADM Investor Services International. Mark, we'd seen the escalation in the region, the Middle East region, with the war in Lebanon, Israel's war in Lebanon, to give a little bit of an elevation to oil prices when it looked like it could have got really nasty and out of control, and then sort of eased off. So not a major, we've seen that in the aftermath of this deal, that the market is kind of retrenched to low 70s rather than mid 70s, which seems to be the geopolitical premium range. Your thoughts then on the other things, the other aspects that keeps this Brent crude oil price above $70 a barrel as we sit a few days from OPEC's decision on what they will do next?
I think what's keeping it reasonably underpinned at the moment is there is better discipline appearing within OPEC Plus. I would expect when they defer the production increase on Sunday, which seems very, very likely now, that they will also place a lot of emphasis on discipline. Because the number of countries, particularly Iraq, Russia to some extent, really haven't been quite adhering to their quotas. So to that extent, it is underpinned by better discipline. On the other hand, There is this fear about Besant and Trump basically wanting to increase US output by 3 million barrels per day. I think one has to treat that with a little bit of a pinch of salt, because if it's not viable in terms of margins, then the oil producers in the States are not exactly going to be rushing to do that. So, and overall, as we've seen before, because we've had periods in terms of the Middle East tensions that there are, where we thought that basically things were going to settle down a bit, and they haven't. So you need to always keep some sort of risk premium in there. And I think that's really basically what's underpinning it at the moment.
Let's go to Genevieve Shah, Vice President, Oil Markets, Refinery and Crude Balances Lead at Rystad Energy. Genevieve, we've looking at, and again, as we always do, the other pillar of this, I mean, we've got on the supply side, OPEC maintaining 6 million barrels a day of oil supply off the market. And then on the demand side, we have what's the latest news from Asia. And we've got Reuters reporting today that Asia's imports for crude oil were up slightly in November, with some recovery by the China. So we're talking about up at 26.5 million barrels across Asia. Your thoughts on this report and the overarching health of demand in Asia as we come to the end of the year?
Firstly, thanks for being on today this morning, Sean and GI team. It's a very dynamic situation, something that not a lot of individuals or agencies had forecast at the start of this year in terms of the Chinese demand weakness coming into Q4. Now, we have seen that 2024 is essentially the plateauing year for the gasoline demand, because of the EV uptake, and you can see that in the new ICE vehicle sales or EV vehicle sales being more than 50% for the last couple of months within China. The diesel demand once more has been fairly muted, put pressure upon due to the LNG truck substitution effect. So overall, Chinese demand for this quarter and parts of the previous quarter weren't fantastic. Now, what does that mean moving forward for Q1? We are looking at some potential weakness, the overhang as well, as we come into the plateauing years of the diesel demand, which of course pull back on the refinery margins, right, with the cracks being fairly suppressed, although the cracks do still remain wide enough for exports, for the export quotas to be fully utilized. Now, what does that mean for the rest of China and Chinese demand and the rest of Asia? Well, we do see some refineries going or announcing closures, the city tax-wide issue as well as the city refinery issue. So, Dalian Refinery has announced a closure and potential relocation, but that might not be the only one. So that's a negating trend versus what has happened in the last few years in terms of new refinery capacity. In the next few months, we'll see a couple of, Daxi, Zhenhai, and Yulong second train still to come online. So it's a real tussle in terms of market share for the Chinese refining and then product make and product export. So that's where the China and Asia demand and refining story comes from.
Laurie, the part of my question in our first conversation, first comment was, where is the ramifications of this deal in Lebanon? Of course, the war in Lebanon, Israel front started October last year after the Hamas-Israel conflict emerged, and it was sort of tied into that. And now it's sort of separated itself, because the sort of position of Hezbollah was that they would continue to this fight as long as Gaza was being bombarded, and Gaza continues to be bombarded, and the slaughter of Palestinians is a daily event now. It's nearly normalized, but we have to make sure that we never allow it to be, because it's just an unacceptable standard for human behavior. But where does this leave the region, this decision, this sort of deal with Lebanon? The rest of the region similarly finds its way to a similar deal with Trump arrival. How do you see it sort of interconnected?
Look, definitely if there is a deal in Lebanon, it means that Iran was on board. And that's very important to understand, like, what is Iran thinking about this Trump administration and how they want to avoid any kind of economic harm or even military or security harms, especially for their nuclear program. So Iran was on board, which means that most probably, even though they didn't have like that much of influence on Hamas the way they have it on Hezbollah, what that means that maybe Hamas now is in a situation where they have no allies anymore. Anyway, like Iran was not that much of a support the way they supported kind of Hezbollah, even that was questionable about the so kind of support, and they were expecting more support. Definitely Syria didn't support in any way. There were like the Houthis and the Iraqis kind of were of support. But that again, like we've seen, like there were threats from Israel to attack Iraq, and Iraq took all the necessary diplomatic steps so that it doesn't get attacked the same way that Lebanon or Yemen got attacked. So kind of we're seeing that maybe the last battalion, like the last group standing Hamas is going to give in and go into a deal, which means that this is what Trump wanted. Trump said when he came, and this is like, I think like everyone is saying, and when he met with Netanyahu, he said, you finish it before I come. So before I come, finish it. So then he might come into something that is like, okay, there is kind of ceasefire, and then he can move on into a plan of a peace plan. What that plan is, it's like today we are seeing that definitely we've seen that there are discussions between the Saudi Arabia and the Americans, and I think that will continue on what the Saudi Arabia wants. And that's very important as well, because Saudi Arabia...
The language out of Riyadh does seem to have changed in recent weeks as ahead of this deal in Lebanon. I don't know if they're connected, but the essential ruler of Saudi Arabia, Mohammed bin Salman, used the word genocide to describe Israel's activities in Gaza, which he hadn't done before, etc. So there's been the language out of Riyadh has kind of stepped up a level.
Because you need to put more pressure, and then definitely when you like, from what I understand from the region for like 20 years observing it, like when it becomes very escalated and to this point, it means that there is a deal afterwards. So it's the tip of the iceberg, and then you have a deal coming. So definitely, and Biden even, like when he was talking about the ceasefire, announcing the ceasefire between Lebanon and Israel, he announced something like saying like, yes, and the Israeli-Saudi rapprochement or any kind of normalization could still be possible, and he still has like 50 days, and he feels that there is a possibility to do. So the way we're going, even like with Gaza and what it's being floated about, like maybe Gaza will be turned into a big real estate project, with the UAE coming in and wanting to invest in it, etc. Yes, there are some that don't like this approach of business for peace or peace for business, etc. But that is Trump, and I think there are many countries in the region that are aligned with that kind of approach. And don't forget, like before 7 October, we had the IMAC project, and the IMAC project is they feel that that's the future for the region, and not what happened on 7 October. 7 October was a glitch for a historic injustice that has happened, which is like the nightmare of the region. That's why, again, even if you do the best of the projects, you need to solve the Palestinian problem. And that's why I think today, if I'm not mistaken, in Brussels, there is a big conference again about the two-state solution conference to discuss it. And that's a reality that I think the Israelis need to deal with it primarily, because they need to accept that the Palestinians are there to stay. What to do with them? You cannot put them all, I don't know why, like just make
Well,
them...
interestingly, today also, which is not often, the Chinese government come out with commentary regarding the situation in Palestine and the Middle East. And Xi Jinping was published in the Chinese national newspapers today expressing very, very strong support for the two-state solution for whatever that is worth. But nonetheless, they're obviously a big player. But meanwhile, another sort of storm starts to brew, Mark, in the land of tariffs. As we talk about physical wars, now we're talking about the foothills of the tariff language and telephone calls with Mexican presidents and Trump in Mar-a-Lago sipping pina coladas. Your take on all of this sort of foothills of the tariff war looming beyond January 20th? Does it have relevance? We're talking, Trump announced Mexico, Canada, two of the world's largest oil producers, and China, the world's largest oil importer, are going to be sanctioned on day one. Your thoughts on what that means for the outlook for the energy markets?
Well, I think the first important point to remember is everyone's much more prepared for Trump this time around. Trump 1.0, particularly the EU was totally caught napping. They didn't really believe it. So that's why we're already hearing all of these noises to start with. In terms of the tariffs, I think there's also a different emphasis coming from the Trump camp. Previously, it was largely about trade. This time, it's become about immigration and drugs. And that's a different tack down which he's going, because it's not just about unfair trade practices. It's if you upset me in terms of security issues, if you upset me in terms of immigration issues, I'm going to impose tariffs on you. So to some extent, I'd say the threat is less in terms of the actual trade. On the other hand, because it's being deployed as a weapon to resolve other issues, it becomes more of a threat, which I think it's nuanced. I think there's another important point in all of this. We know the four regions and countries which will be most vulnerable. So the EU, China, Canada, and Mexico. Now, the problem is if you impose those tariffs on China, what happens to those exports which were going to the US, where demand is going to drop off because of the imposition of tariffs? Does China then effectively escalate what will be a trade war with the EU by dumping, effectively cutting prices quite sharply on the EU, indeed also the UK? This was the point made yesterday by Deputy Governor, Bank of England Deputy Governor Lombardelli, that's saying it could actually be deflationary for the UK. So it's very, very fluid outlook at the moment. And I think, like the Fed, everyone should basically see what is actually done rather than try and prejudge what will be done, because some of it Trump can do via executive order, some of it will have to go via the legislature, and just because the Republicans have control doesn't necessarily mean that they're going to rubber stamp everything that Trump wants.
Yaniv, earlier this week, Rystad Energy put out its market update, and the first sentence caught my attention, which was, "We're on the brink of major shifts in the oil market, driven by the potential return of a protectionist Trump 2.0 era and an outward-looking expansionist China 3.0 moving beyond export-led growth." I mean, there's a lot in that sentence cited to the global head of commodity markets at Rystad Energy, Mukesh Sadhav, who's also a commentator on this podcast. But as part of that team and that outlook, I wanted to get your sort of breakdown of what that means. We're on the brink of major shifts in the oil market. That's a fairly major statement, where the oil prices are sort of throwing off any of this is kind of, seen this all before, nothing to look at here.
Well, that's the big question, isn't it, here? So we're looking at China 3.0, but first a Trump 2.0, and then a potential OPEC 4.0. Okay, so we're all working in series here, but let's begin with the Trump 2.0. Right, with the Trump 1.0, we saw a large increase in production on the US front of crude and condensate production, total liquids, around 20 or so % year on year for the 4 years. Now that was significant. That is something that is very unlikely to happen again. But Trump 2.0 doesn't have the opportunity for Trump 3.0 with the US election system, right? So it's more of a cementing down what the views are and how things will proceed in the near future. Now, what does that mean for the production side of things? Well, as Mark mentioned a second ago, there's firstly the tariffs and the trade war potential coming in, which is going to hurt what exports are from Canada and Mexico coming into the US. So the US, of course, with Trump 2.0.
Well, Mark is saying wait and see, because look at what he does rather than what he says. You guys are already saying forget about what he's going to do. We're saying major shifts of what he said, and so I just wanted to get a sense of what does that give us one or two of those major shifts, like. What is that? I mean, other than President Trump coming into office, of course, that's a new shift because it's not the last president, it's a new president. But what's the major shift in the energy markets that we should be focused with?
Well, we're looking at potentially higher and lower prices, a little bit more volatility, right? It's not one or the other, it's potentially both because of inflationary potential, but also the trade war and the tariff war potentially hurting both sides of whoever the US is on the other side of. So that's one shift. I think if we just quickly jump onto the China 3.0 as an expansionary effect, right? So the China 2.0 was mostly working around how exports to the global market were, and exporting really expanded within China for the refinery side of things and others, and the manufacturing. But the China 3.0 is very much more around the plateauing of the demand for domestic purposes within China and more of expansion of outside of China, right? So we're looking at the Belt and Road Initiative and building roads and ports and assets outside of the country, which is going to really extend in terms of non-fossil fuel usage, so more of the electric vehicle penetration to the global market. Now, OPEC 4.0, this is the third element of.
Let's come back to that because I'm
Sure.
0.0'd out. Let's go to the survey question and see where we're at. And we'll come back to Jadiv on OPEC Plus because it's a big part of the answer to this question. What will Brent oil prices average in December? We've been in this ping pong of closer to 70 or closer to 75. Has the current price built in already the OPEC rollover, and so that's more likely to be closer to 70, or is the market yet to price in the OPEC rollover because it could be 3 to 6 months or it could be 1 month? So the question to everybody is, what will Brent oil prices average in December? Closer to 75 or closer to 70? Laurie Hatayan, our phenomenal geopolitical analyst sitting in Brussels, back to you once again. As you mentioned, Brussels, your favorite new place, that it's got a B in it, I suppose. I can understand, it's when you're replacing one B with another, you got to go. But joking aside, because obviously these are serious matters, the other big conflict that has been focused on the whole world and of the energy markets is, of course, Russia-Ukraine. And in some ways, that could be much more consequential with the arrival of Trump. And we're already seeing, again, a similar kind of escalation there that we might have mentioned earlier in the language in the Middle East that sort of led to the head of the Lebanese ceasefire. But in terms of Ukraine, Russia, we're seeing the escalation with these elevated missile capabilities. I wanted your thoughts on where do you think that's going, and does it have risk of getting out of control or coming back into total control? What are your thoughts on where we're going there from a European point of view?
Look, at the beginning of the week, I was joking with friends of mine that I was asking them, though, how are you doing? So they were like, okay, the situation is very bad. How are you doing? They were asking me. I said, yeah, everything is okay. It's snowing, and then we might be attacked by a nuclear, there might be a nuclear attack in Brussels or in Europe.
Just something minor like a nuclear attack. That would certainly qualify in the Rystad definition of major shift, that's for sure. We would give them that one.
Yeah, so again, this high tone, when you start really either so Russia using these new technologies of missiles attacking, and then US saying that yes, now Ukraine can be allowed to attack the Russian land, the EU being like, yeah, we have to support till the end. That means that there is a deal coming. Again, like the same, like when you go up like very high and escalate in a discourse or an action, that means that something is changing. Everyone knows, again, like that there will be some sort of a possible deal on the table. And everyone is looking at that. They, like, the EU now doesn't have that firm ally, which is the US. The US, like with Trump, is like, okay, what's practical? We need to end this. We need to move forward, whatever it takes, etc. So I think the EU is getting ready for that. They understand that. Again, as it was said, like we know Trump. And there might be differences, but we know how to act with it. The same commission is there, like von der Leyen had to deal with Trump. So now it's von der Leyen again with a new team with her. So that they are kind of prepared to what they might take and getting prepared to what they can accept and what they cannot accept. But I think that even like with everything that is being said, there is a kind of a fatigue of the war. And since it is becoming like, no one is winning, right? And it's getting worse. So now
well, let's go to Mark on that, because I think one of the key countries in this potential "are we at fatigue" level is a country where Mark lives a lot of the time and knows well, Poland. A major player now, obviously on the doorstep of Ukraine, at the front line of this, and all along with the other Baltic countries and other countries in that neighborhood, Central Europe. What's their fatigue compromise? What does it look like from there, do you think? What would they accept or not accept?
I think for Poland, the Baltics, Scandinavia, all of whom, by the way, are doing a lot of civil defense spending, ramping it up. Poland's spending on defense this year is going to be 5.5% of GDP. That is a whoppingly large amount. I think their fundamental point, and this is where Trump and his coterie of advisors are going to have to be careful, is while there may be fatigue, and even the UK is more on the side of Poland and Scandinavia, is there really isn't going to be much acceptance of giving land to Russia. And resolving that issue in whatever is being, whatever deal is being tried to make is going to be the key one, because anything which basically cedes land to Russia, Poland will just say, well, okay, you've just given them, and the Baltics above all, and Finland, you've just given him free rein to come invade one of us.
Is there a fudge there to be had, like not give it but lease it, or Russia's renting it for a decade, or
buffer zone? There's a lot of things being talked about. Then you also have to actually think what Mr. Putin would accept. I'm pretty sure he wants Ukraine to basically give in almost completely.
He wants I win. He wants that George Bush moment, mission accomplished.
Yes.
Let's see. I think a lot to play out there over the next 2 months. Hopefully it won't disturb all the holiday seasons, but closer to 70 is the view in this room. Yaniv, your thoughts on that? And again, coming back to your OPEC 4.0, and I'd recommend to everybody that they read this Rystad Energy Market Update, because I think what's really useful about it is that it puts very definitive positions out and makes you think and have to really sort of put your own thesis against it. So we thank them for that. But Jenny, you were on to OPEC 4.0, where that plays into this thinking.
Agreed. Yes, looking at this, OPEC 4.0 is definitely one to watch out for. The reason why I'd say that is we're expecting, and we have done for the last, 5-6+ months, we're expecting a rollover of these cuts. If you just look at the simple crude balance and then looking extended at the liquids balance, it's a no-brainer in that sense. We're looking at a very oversupplied market going into Q1 next year and all of 2025. Look at supply growth is around 3 million barrels a day year on year, 24 into 25. Of that, non-OPEC plus 1.6 million, and of that, the US is 400 KBD. The rest of, looking at Brazil, Guyana, Norway, and Canada, these are mostly light sweet, medium sweet barrels compared to, apart from Canada, but compared to the the OPEC plus growth of 1.3, which is currently baked in as per directive, which is mostly medium sour. So there's a real shift on the quality angle, which is worrying. If you look at the product demand, next year we're seeing a growth of around 1 million barrels a day, and refinery runs growth of sort of 600 or 700,000 barrels a day. So definitely very oversupplied if it's just a simple maths basis, which is really going to put pressure on prices and could really tank further. So an extension of the cuts is to come, maybe 1 or 2 months, while China 3.0 and Trump 2.0 take into consideration for a few months of effect. But I think OPEC Plus will look at a couple of other factors as well, looking at the compliance that Mark mentioned a second ago. With Kazakhstan, potentially, we're hearing whispers of potential following Angola in the exit of OPEC Plus, but also looking at Russia. Russia has performed its duty and has the voluntary production cuts, which it has potentially been adhering to in the last few months, after overproducing earlier. However, OPEC Plus would definitely want the market to remain in the backwardation mode. We've seen over the last few days that the backwardation on the M1 to M3 for Dubai has extended to nearly $1. And that is something that the front end of the market of the futures of the spot rather, would like to push up a little bit in supply tightness. So that's our view. Do you think
Okay.
OPEC will extend?
Well, we don't have much longer to wait. I would just add the caveat to all of that, that when all of the market analysts are in consensus that there is a rollover from OPEC, they've usually, on occasion, quite often like to deliver a surprise, and I wouldn't hold that out. We do have built into this background that the UAE does raise its quotas from January 1st, which is built in as, you know, there's multiple parallel corridors here, cuts that go on to all of next year, cuts that expire on the 1st of January, and quota increases, and that includes the UAE. So those I can't imagine would be rolled back, given how hard they fought for them for many years. So, you know, don't rule out an OPEC surprise of some sort. We'll wait and see. It'll make Sunday interesting, if nothing less. Thank you, Mark Oswald. As always, great to have you. Lori Hatayan and Yaniv Shah, really great to have your insights and contribution. Have a great end of the rest of the week. And for those that are in that happy Thanksgiving camp, happy Thanksgiving. All the best. Thank you. Bye-bye.
Thank you.
Thanks a lot.
Bye.